When people talk about renewable energy, when people talk about the need to green the entire transport system with electric vehicles and all of that, you need to prepare the bankable projects for private sector to invest in. And that's why under the Alliance for Green Infrastructure, this is designed to do two things. First, mobilize $500 million for project preparation and project development for green infrastructure in Africa. And second, is then to mobilize $10 billion of support from the private sector to invest in green infrastructure in Africa. More actions are being taken on climate financing from private sector. Right here in Egypt, the African Development Bank supported the government of Egypt to launch a $500 million Panda bond. This is the first issuance of a Panda bond by Egypt, but also the first in Africa to deal with supporting climate resilient infrastructure, whether it be water, whether it be renewable energy, whether it be electric rails in Egypt to reduce emissions. And we are proud as African Development Bank to have provided $345 million of partial credit guarantee to the government of Egypt to be able to launch this bond. So when we think private sector, capital markets are very important. How you access the capital markets, the terms of your access to it, the tenor at which you're able to actually issue your bonds, and the pricing is very important. So when you have a AAA rated institution like the African Development Bank supporting the government of Egypt, that allows them to be able to launch this Panda bond effectively. Now, Kenya is another country that we are working with. Kenya has launched its third green bond at 4.3 billion Kenyan shillings. That's roughly about $40 million to finance climate change mitigation and adaptation projects. The good thing is that this particular bond, green bond of Kenya, was oversubscribed, indicating very strong investor confidence in Kenya's strategy and green growth for their economy. Botswana is another country. And as you know, Botswana has a lot of game reserves, and they are working with us to be able to raise private financing to support their economy to be more resilient. This includes a 100 megawatt solar power plant that will allow them to be able to power their economy green as well and create a lot of jobs. Gabon. I don't know if there's anybody here from Gabon. Gabon, DRC Congo, Central African Republic, and also the Congo, Republic of Congo. That whole area, Bassin de Congo, the Congo Basin, is the largest green lungs in the world for the climate in terms of carbon sequestration in the world. But here's the problem. It's just there. They're not getting any money for that. And therefore, so we are working with them to see how they can better value their natural capital, which is all these forests that they can use for climate, for carbon sequestration, and use that to change the valuation of their economy. If you are sequestering carbon for the world, why is the world not paying for it? And if you actually value that carbon and you use it to value up the value of your economy in terms of GDP, weighted upwards by the value of the carbon that you are sequestrating, it means that your GDP is much higher than if you didn't consider that. And so if somebody is talking about debt to GDP ratio, which is what we all talk about, right? It means the debt to GDP ratio where the GDP is adjusted for the positive externalities that is created by sequestering carbon means the debt to GDP ratio of Gabon, DRC Congo will be much lower than they are today. And that means that they can borrow more money. They should be able to borrow more money. The point I'm making is this. How many times have you heard that we need to actually raise trillions of dollars? But I don't believe you can raise trillions of dollars unless you change how you measure wealth. We have to measure wealth differently. It's not just monetary wealth, it's natural capital. How you are managing your natural capital stock is what determines your wealth. And in fact, maybe I'll come back to that in the questions. Maybe today some countries that are very rich will not be as rich as they are if we actually were doing that in terms of valuation of GDP up and down based on the contributions, positive or negatively, that you are making. And there are several other projects. I'm not going to go through them. I will only talk about them during the Q&A session. So I just want to say that throughout these meetings, you will have knowledge events. We're going to be launching the African Economic Outlook. We also have a knowledge event on sustainable development and how we finance that. You will hear a lot about how we raise more money for climate finance through private sector throughout these annual meetings. And you also hear about what I was just talking about, how we help to measure or value the economies of Africa better. Moving away from just using GDP. Who eats it? Nobody eats GDP. And if you measure my GDP without looking at the contributions I'm making in terms of carbon sequestration for the world, you are not doing me any favors. So your role as media, and I appreciate this time to interact with you, you're going to hear all these stories. You're going to hear what works. You're going to hear what's not working. You're going to hear about challenges. You're going to hear about opportunities. You're going to hear what governments are doing, what private sector is doing, and what we are doing as multilateral financial institutions, or what we should do even more as multilateral financial institutions. Let me end by saying that Africa is in a very, very dire situation with climate change. And there must be a sense of fierce urgency of now to tackle that particular issue. In my view, Africa is really choking. Africa is choking badly because of all of these challenges. It needs space to be able to breathe. You got COVID, you got debt, you got climate change, you got conflict. Well, when it's raining, it just happens to be raining way too. And welcome once again, and I'm sure you'll have lunch afterwards. Otherwise, I will not be happy that you are not going to have lunch. So thank you.
Hello, can you hear me? Thank you so much, Mr. President, for those remarks. And as I said, Mr. President is accompanied with Vice Presidents here. And if there are any questions, may I invite Vice President Solomon Quainer, Dr. Beth Danford, and Professor Rama and Dr. Kariuki. If you can just take those seats there so that if there's any question you're going to field, the microphones are there, you can press red and then you answer that. If you can follow this way, there's stairs here, and go right to the end. Okay, I'll come around with the microphone. Remember your name, your station, and be brief, please. I'll come around. You are the first here. Just hold on for the Vice President to settle down.
Bonjour tout le monde.
Good afternoon, everyone.
Moujahid.
Malika Moujahid is my name.
Bien devant, c'est bon. Donc,
Translation.
Good afternoon.
Okay, no problem.
No, go ahead. I can hear you.
Okay.
America Mujahid from...
So I need to ask how the African Bank can support private sector in Morocco. Thank you very much.
Okay, I'll come next to you.
Hi, good morning. My name is Dr. Ahmed Al-Kawish. I'm from one of the private sectors that we can provide finance if the African Bank can provide us adequate guarantee. So can the African Bank provide Eurobond or another guarantee that against that we can, as a private sector, provide fund?
So can somebody tell me that?
Sorry?
I couldn't hear you from here.
Okay. I am from a private sector funding, let me say. So if the bank, the African Development Bank, can provide adequate, acceptable bank guarantee, we can provide fund as well. So is the bank able to provide guarantee?
Okay, one last one. Let me come here.
Thank you. Tuleto Zwane, South Africa Business Day. My question is about green infrastructure for reevaluating GDP, which is what you mentioned. Could you please explain how a country like South Africa could use that to its benefit as well, and how the bank is assisting?
How South Africa can use that?
Yeah.
South Africa.
Yes. Thank you.
Okay, Mr. President, we'll take those 3 questions and then we'll take another batch of questions.
And let me start with the Morocco. Okay, let me say it in English maybe so everybody sees there's no translation. In Morocco, we are very proud of what we've done in terms of supporting Morocco for energy in particular. If you look at the new Ouarzazate, which is the largest concentrated solar power plant in the world, we are one of the big financiers of that work. We've supported Morocco also in private sector on several other things, including the medals, which is another one as well for energy. There is the port, the Nado West port, which we are financed as the bank, which you guys did so well that the capacity of it, which was 9 million tons, containers, was exceeded in just about 3 years. Now you're looking at a new extension of that, which the African Development Bank will also be financing. The bank supports several private sector activities in Morocco, especially through lines of credit that we provide for several banks in Morocco. And linking that back to the issue of climate change and green growth, I think Morocco has done extremely well, exceptionally well, when it comes to increasing the share of renewable energy that it uses to power its economy. And we are looking to how we can support the energy transition work in Morocco using public-private partnerships to continue to do more for Morocco. But I'll say this also about Morocco is that Morocco is also extending its success to other parts of Africa. For example, I mentioned to you the Desert to Power initiative. The head of Masen, Mr. Bakuri, is the one that is the chair of the technical group that is helping us to design the Desert to Power initiative, which is going to be, when completed, the largest solar power zone in the world. And so it's coming from a lot of private sector experience that you also have in Morocco that is helping us to inform how we design this for the other parts of Africa. And one other thing, of course, I must say in Morocco is on agriculture. We are supporting Morocco now to also develop special agro-industrial processing zones. In fact, I was in Morocco recently to see one of those projects. And I was very, very impressed with what I saw. And finally, about Morocco is Morocco and fertilizers. The African Development Bank invested well over, I think we've invested maybe about what, $100 million in OCP? Yeah? $200 million. I knew it was two. Okay. We invested $200 million in the Office de Refin de Phosphate, which is the OCP, to manufacture phosphatic fertilizers for Africa. And that's very important because OCP is the largest producer of phosphate fertilizers in the world. And so you can see that we are supporting quite a lot of work there in Morocco on the private sector side. Now, my friend on the, first, can you clap for him because it's from private sector, he's asking me a question. I wish other private sector people will come into the media house and ask questions that I want to fund. What can you do for me? No, thank you for your question. You know, there are two ways in which the bank supports a lot of work from private sector. But I want to make 3 points before I get to that. First, you hear a lot about private sector, and the first thing you hear about is Africa is risky. Africa is risky. Africa is risky. Really? When you get on a plane to fly here or fly anywhere, they ask you, would you like to have coffee? Would you like to have dates? Would you like to have rice or whatever? Or wine, red wine, white wine? You say, yeah, I want it. Oh, you want to watch some movies? That's the most risky decision of your life you're taking. Flying 35,000 feet above sea level. And then you sleep. Why? Where am I talking? What am I going to? The issue is not risk. The issue is how you manage risk. There's risk in everything. You're sitting here is risky. But that's because we have security people that make sure that your life is safe. So risk should not be a reason why you're not making something. It's a risk-return world. It's managing your downside risks and optimizing on the upswing of it in terms of returns. But we realize that it's not very easy for people to sometimes get that. Second, let me give a statistic to convince you. Maybe your risk is not as high as you think. We asked, Moody's did an assessment, Moody Analytics, for over a decade, looking at the losses on infrastructure globally. You know what they found? You will expect that the losses will be higher in Africa, right? The losses, Africa has the second lowest rate of loss for investments in infrastructure in the world. It is higher in Latin America, it's higher in Eastern Europe, it's higher even in Asia than it is in Africa. So facts and reality don't match. Africa is risky. Riskier than what? So we have to make sure that when we are saying risk, we're talking of real measured risk, not just simply perception of risk. I cannot be trying to reduce your passive risk. I'll give you an example. I learned to swim not to West Lamin Barrow. You see that? Can you get up? This is our Director General in Nigeria. He came to me one day and said, Mr. President, you don't know how to swim. In case there is a problem anywhere, you are a key person risk. So we have to teach you how to swim. So he thought they got me a coach to teach me how to swim. So I began to learn how to swim. It was a big pool. And then my coach told me, after 3 days, you can swim the whole length of this pool. Oh, I said, really? You must be out of your mind. So I started. He said, if you sink, I'll be right there. I'll grab you. Right? It looks like some of you have that kind of experience, right? So I kept swimming to the other side of the pool. I kept hearing, if you sink, I'll catch you. If you sink, I'll catch you. I kept moving. I got to the end of the pool. Then I looked back, and he was not there. Then I started sinking at the end of the pool. And then I found out that the best place to swim is not the shallow end of the pool, it's the most risky part of the pool, is that end. If I could keep my air in, I could float better. All I'm saying is this: we must manage risk. Ability to know where you are investing, the counterparties you are investing in, the policy environment you are investing in, and also to invest in bankable projects that others bring to you. I think that will help a lot in many of this. We have the Africa Investment Forum, which we do. In 3 years, we've done $143 billion of investment interest. And why are they coming to Africa? Because it's real, and the risks are not as high as you think. But to give you comfort, like my coach, I'll be right behind you. And we have partial credit guarantees that we provide. We have partial risk guarantees that we provide, but allows us to be there with private sector to be able to make those investments. So far, we haven't had any challenges at all doing that. So we'll be there with you. On South Africa, my sister from South Africa was about this issue of the... Let me ask the Vice President to comment, and I'll comment on something. No, you. Power. He was asking about the... Yeah. Okay. So you want to say something now? Okay.
Yeah, so essentially what Mr. President was saying is that we have a situation whereby economies have, countries like Gabon, DRC have huge forests, but their GDP is considered to be very low. However, they offer this huge public good, these lungs of the entire world. For example, a country like Gabon, small as it is, okay. So for South Africa, you have a lot of minerals. You have things like platinum. You have a lot of minerals which have not been fully exploited, and this is the future of green energy, because this is what you are going to use to make batteries. So basically, Africa has manganese, it has platinum. All these are vital for manufacture of green hydrogen, for example. So we expect that with this, South Africa's GDP, if we start manufacturing the batteries in South Africa, it will become huge business. And that's why, for example, we are involved in a very big way in South Africa. We've just built the largest the largest battery storage system in South Africa. I think I'll stop there, Mr. President.
No, thank you. And that point that the Vice President was just raising It's very important because that battery storage system we talked about, it's what? 800? Yeah, it's 8,000, 800, yes, that's what I was saying, 800 megawatts hour is the battery storage system, is the largest in Africa. But 3 points I want to add to what the VP is saying. You see, and the chief economist is here, both in terms of the blue economy that you have, in terms of the forests that you have, and how one actually conserves all of those things to increase carbon sequestration will allow South Africa or any African country to be able to properly value their own GDP based on real wealth, which takes into consideration the environment. And I will even go a little bit further on this particular issue. I think that globally, we need to relook at how we use GDP as a basis for the wealth of nations, because it is not the appropriate way to measure it. Because GDP does not ask you the question, what are the technologies that you use to achieve that particular wealth? What are the externalities that you generate when you have that kind of wealth? So you may look rich for yourself, but you're creating poverty for others because of your global emissions. So we need to actually have a relook on this. Real wealth has to value not only the value of goods and services produced in an economy, how it is produced, and the positive or negative externalities of that. And that will support countries, many countries in Africa. When people say in Africa, the issue of carbon market is important. Africa only contributes we have 0.01% of the global carbon market. And yet we have the world's largest carbon sink. Does that make sense? It's the valuation of carbon when it comes to Africa. And I'll give you an example. I lived in Kenya many years ago, and I remember somebody walking up to me and said, Dr. Adesina, we want you to, I was working there with Kofi Annan, late Kofi Annan, we want you to support farmers to not grow crops in exchange for carbon. And I asked, what's the price of carbon? You know what I was told? The price of carbon was $1 per ton of carbon. Of course, I said, if I were the farmer, I would cut down every single tree, grow a lot of high-valued horticultural crops, make more money and better livelihoods for myself. We have to get the price of carbon right. When we have the price of carbon right, Africa will benefit massively from being a carbon sink. The carbon market globally is pricing itself wrongly, and it's not helping countries like in Africa.
Okay. Hello, yes, I'll take now this side. I was that side, about 3 questions. I took one here. I will take yours. I will take you, then I'll come back this side. Speak loudly.
All right. Thank you so much for the opportunity. I'm Kenneth from CNBC Africa. My question is, in terms of private financing available for this sector, we're seeing just a handful of countries that are accounting for the bulk of it. And I'm trying to imagine how the bank is thinking in terms of managing this skew and getting some of the hardest hit countries. That's talking about private financing available for climate change. Yeah, how we can manage that skew better so that the hardest hit countries can benefit. The hardest hit countries can benefit more from the available financing here.
Okay, let me come right at the back here. I'll come to you at the back.
Good afternoon, everyone. My name is Wole Oyebade from the Guardian newspapers, Nigeria. Mr. President, if I heard you correctly, sir, you need $2.7 trillion by 2040.
2030.
2030. If I were to give you that money, or I show you the way to get it, what is the type of Africa that you are envisaging will happen by that time? Thank you.
Okay, I'll come here so that when we go back, we'll be winding up the session.
Monsieur le Président, bonjour.
Good afternoon, Financial Africa. As you indicated, there is a need for $1.6 billion by 2030 to finance climate action in Africa. What will be the exact role of the African Development Bank in the new financial architecture in the world that provides green funds to the climate, for example? I mean, it seems to be that financial institutions are aplenty, but there isn't one central institution where these green funds will be concentrated.
No, thank you, Adama. Let me start with the last question. Je sais pas si...
I don't know if I can speak in English. Is that all right? It's just that we're having an issue with the interpretation, so it's easier to speak in English for now.
Global financial architecture, and how do I see, or do we see, the role of the African Development Bank? I'm actually giving a speech tomorrow on this particular issue, so I will say I have more to say tomorrow on this particular issue. But let me make 3 points for today. That is the fact that the multilateral development banks have been asked to scale up financing for development, which we should do. We have debt, we have climate crisis, countries are still recovering from COVID-19 situation. You have conflict situation that is also there. You have global price inflation that is there. It's just a whole lot of things that African countries are dealing with. They need a lot more financing. So, yes, multilateral development banks have been asked to mobilize more resources. But in mobilizing those resources as multilateral development banks, there was a group put together called the G20 Capital Adequacy Framework Group. And that group was supposed to look at how we are capitalized and how our prudential ratios affect what we do. They listed a number of areas that we should be working on. Literally all the areas, most, let me say, of all of the areas they listed, the African Development Bank has been doing before anybody started talking about them. First, we were the first multilateral development bank in the world to do synthetic securitization, in which we moved some of our assets, portfolios on our loan book to institutional investors. We did that, I think, in 2018. And that we did for $1 billion. So which means that we got institutional investors to get used to investing in infrastructure in Africa because of that synthetic securitization. Secondly, we are also the first multilateral development bank in the world to do another room to run. We call it a room to run, where we took this time, I think it is the non-sovereign operations of the bank, the portfolio, and we transferred it again to private sector. $2 billion with support from the UK government. And I think we also got it on the, is it London Stock Exchange or something? On the London Stock Exchange. And then the other part of it is the special drawing rights. Because special drawing rights are the SDRs that are issued. And we at the African Development Bank, and that's my third point, have been leading globally on how the SDRs can be rechanneled to multilateral development banks. As you will hear me say tomorrow, multilateral development banks, because we are AAA rated institutions, we are leveraging machines, okay? We are leveraging machines. We can leverage a single dollar at the bank, every dollar of SDR, 3 to 4 times. So a $10 billion reallocation of SDRs to the African Development Bank would translate to $30 billion to $40 billion for Africa, just like that. So as we think of the global financial architecture, we need to look at the complementarity between the IMF and us. We are very supportive of the IMF's work on the Poverty Reduction and Growth Trust. We're very supportive of the Resilience Trust of the IMF. But one thing is that we can actually invest and we can actually leverage. And so it's about complementarity, it's not about competition. Our machine allows that to work better because we can do it and complement what IMF is doing. And I'm delighted to let you know that the African Development Bank, together with we led it, is Asatu here? No, she's not. We led this work together with the Inter-American Development Bank to develop a new framework that will allow the countries that got SDRs, that are developed countries, that don't need it, to be able to rechannel it to Africa through the African Development Bank leveraging machine. And I'm delighted that following a series of engagements with the IMF, they've been very, very supportive. The IMF staff agreed that the approach that we have developed meets the reserve asset quality standard, which is what you need if you are going to be able to have SDRs rechanneled to you. It has to meet reserve asset quality standard for that asset. So the model that we developed now meets it. And I'm very happy and thank the IMF for that. So what that really means, as you will hear tomorrow, is the global financial architecture needs to look at leveraging, using multilateral development banks better, sweating our balance sheets better, and being able to mobilize more resources at scale. So, Adama, the rest of it you will hear tomorrow when I have my, but I hope it's helpful for you to see where we are in terms of that. For Nigeria, CNBC Africa, the hardest hit countries, how we will support them, right? Is it on climate change or just generally? Climate change, okay. Let me make the following points. If you look at those countries that are most vulnerable to climate change in the world today, 9 out of 10 of them are all in Africa. And they are all in sub-Saharan Africa. And they are all low-income countries. Chad, Mali, Burkina Faso, Mauritania. These are low-income countries. And at the African Development Bank, we consider those countries to be, we only finance them with concessional financing under what we call the African Development Fund, which is the concessional financing window of the African Development Bank. But the reality is, they are also the countries that are least able to access climate financing globally because of capacity, because of complexity of global climate investment funds, the amount of documentation they have to do, and just weak capacities to execute them. So it's quite challenging. There are some real issues for them. But they are the most affected, but the least able to access it. So what have we done as a bank, which is your question? The African Development Bank, in our 16th replenishment of the African Development Fund, which was done last year, and it was December last year, we were able to mobilize $8.9 billion for that African Development Fund 16th replenishment, which is, by the way, the largest ever replenishment of that concessional financing window since it was set up 50 years ago. It tells you the commitment of our donors to this fund towards those countries that are most affected and least able to access climate finance. But we went more than that. We set up what's called the Climate Action Window, which is a window to just raise climate finance for adaptation for those countries. And we were able to get our donors to put up, I think, $429 million towards that climate action window. And it will support things like the following: 20 million farmers to have access to climate resilient agricultural technologies, 20 million additional farmers or people to have access to weather index insurance, more than 1 million hectares of degraded land restored, and other things that has to do with water and so on, plus renewable energy. So it will make a lot of difference. The last point I want to say is, at this annual meeting, we have also been discussing with our board of governors, of directors rather, about how we can leverage the equity of the African Development Fund itself and use that equity to take that fund to the global capital markets, rate it as a AAA rated institution, and then be able to leverage more resources for those countries. And I think our assessment shows that we can leverage what? It's about 4 billion UA, almost $5 billion every cycle. So if you look at 5 cycles, it's about $25 billion in that range by just doing that. So they will get access to concessional financing. They'll be able to fund transformative projects and so on. So that is actually before our board of governors at this meeting for them to consider. And if they approve it, which I'm hoping that they will, we're excited about that instrument. It will mobilize more than $25 billion of additional financing. So we are going to our board of governors to request them to look at that. But that tells you how we as a bank care about the low-income countries and how we are trying to develop instruments that allows us to support them for climate change. And the last question is, what will you do with 2.7 trillion if I had it? Do you have it? No, it's important. I don't like theoretical stuff. If you have it, you can give it to my chief finance officer here. No, but in all reality, I'll just make the following points. First is that it will support African countries to fast-track investment in climate-proofing their economies. I told you we lose $7 to $10 billion, $15 billion, $7 to $15 billion every year. So if you climate-proof your economy, you won't be losing that amount of money. Second, I'll give you an example of what Sahel will look like. Today, you have the Great Green Wall in the Sahel. It's the largest trees planted, millions of them, across the Sahel to reduce desertification. If Africa had that money, we will green the Sahel. If Africa had that money, we will recharge the Lake Chad Basin. The Lake Chad Basin, we used to give livelihoods for millions, more than millions of people in Chad, in Nigeria, in Niger, in Cameroon. It's now 1/10 of its size because of climate change. So when people talk about Boko Haram, they talk about insecurity, well, guess what? Climate change has decimated those areas completely. But if you had that money, you can literally recharge the Lake Chad Basin from the source of the water, which is in Central African Republic, and recharge it and bring better resilience to that area. China did it. They move water from where? Which part? I think it's from the south to the north or something like that. It's very expensive. But if you had $2.7 trillion, you will do that. And guess what that will do? It will stabilize the entire Lake Chad Basin for Africa. If you had $2.7 trillion, we will insure every single African country against catastrophic risk events. My vice president is here. Maybe I'd like her to say one word about that particular issue, what she will use with that money on that issue.
Thank you, Mr. President. And just speaking of the importance of risk insurance to really addressing and really adapting to climate change, we know that shocks that affect the African continent are becoming, these are weather-related shocks becoming more frequent, more severe, and more unpredictable. And we need to ensure people against these shocks. So we're working with African Risk Capacity through the African Disaster Risk Finance Initiative that we have to help countries pay insurance premiums to take out sovereign risk insurance. So when the disaster strikes, then they can receive money to provide payouts to their affected farmers, their affected populations when drought occurs, when flood occurs. Just to provide a recent example, in Malawi, agriculture in Malawi employs more than 60% of the workforce. And again, Malawi has frequent shocks. Most recently we've heard about severe flooding. Earlier in the year, last year, they had extreme drought. And we helped them through this ADRIFI mechanism pay their insurance premiums. And through that, they were able to receive $14 million in a payout when drought struck. And with that, they were able to provide 51,000 people with food to get them through this very, very extreme shock. And then also provide cash to another 150,000 families to help them rebuild their lives after this shock. So again, really ensuring that diverse risk products, insurance products are out there to help really climate-proof future livelihoods is very important and something we're investing in going forward.
And one last thing, I mentioned to you desert to power. If you had $2.7 trillion, the whole of Sahel will have electricity. Everything will change for all those countries. So, as I said in the beginning, money matters, money matters, money matters. And sometimes when we talk about money, people say, and I hear this a lot, people say, do you have the absorptive capacity? Right? If you go to a dry ground that is very dry, and you have a bucket in your hand, and you ask that soil whether it has absorptive capacity, don't ask it, you pour the water first and see whether it has absorptive capacity. So thank you very much.
Okay, we're going to take the last round of questions. I'll come to this table here, and then the lady will take 4. Yeah, we're going to take you.
Thank you. Maureen Chibo is my name, and I publish Real News Magazine online based in Nigeria. I will take my question from the last statement you made when you were, and then you said Africa is in a very dire situation. It needs to breed, it needs space to breed. And Africa is also being choked. I'm thinking of energy transition and the race towards renewable energy. I've heard here so many dollars mentioned to be mobilized for climate financing, but I didn't hear anything about what AFDB is going to do to ensure that Africa generates enough revenue to develop the technology to tap the resources they have, and I mean fossil fuel, because that's how they are going to generate revenue, and some of them, Nigeria, where I come from, is a major source of revenue. Is Africa not being choked if we are asked to drop the major source of our revenue generation now because of the race towards renewable energy? Thank you.
Thank you. You next.
Bonjour, je me présente, c'est Rim, je suis journaliste.
Hello, I'm Rim. I'm a journalist in the Algerian radio station, Channel 3. Today we are all here for one reason, just to get mechanisms for Africa's economic development. Africa's economic development also has to do with food security, energy security, which are an emergency now. I am talking about the geopolitical challenges and stakes across the world. We absolutely have to develop the continent's economy. The continent has huge potential. Energy, agricultural lands. We also talk about a paucity of financing. We need to encourage investment and create partnerships. When you talk about encouraging investment, are you looking about domestic investment between African countries? I'll give you the example of Algeria, which is an indispensable continental partner. Or are we talking about intercontinental partnership? That is, do we just rely on our own resources to finance ourselves, or we call on external partners? Please answer in French if possible.
Yasser from CGTN, Chinese Global Television Network. My question is about the panda bonds you mentioned today for Egypt. This is the first of its kind for Egypt and I think for North Africa. Would it be a viable solution as a tool to expand with the rest of Africa, the pros and cons of having this type of bonds for climate change or climate growth?
And the last question here, Mr. President, I'll come to you.
Good morning. My name is Lucy Ogalwe from News Agency of Nigeria. There is increasing occurrence of flooding and predictions by NIMET for more flooding in Nigeria. I don't know, is there anything the bank is doing to support, as a way of support to curb this incident for the country so it doesn't attain?
Okay, thank you very much, Mr. President. We'll wrap it up with those questions. Thank you.
Well, thank you very much for those questions. I think Chibo, right? Yeah. On your question on the energy transition, I think your question is about how does energy transition really work. I think first, energy transition is something we all need to do because we know that carbon emissions are not helping the world. And we need to keep the world at 1.5 or below 1.5 degree Celsius, minimum. So that is not negotiable at all. But in trying to look at that, we need to recognize historical contributions. The Paris Agreement was very clear. It is a differentiated, it's a differentiated approach in which the developed countries, who actually are the ones that contributed all of this, need to move fast into transition right now. And the developing countries are going to peak and come down in the next half of the century. What we must avoid is, don't fast track the next half of the century to today. I don't know if I'm clear. Badly affected countries have no resources. It will take time for them, longer time for them, to do energy transitions. And I would like to say that it is not ideology that drives sustainable energy. It is pragmatism that drives it. It's not an ideological issue. So take the case today in terms of, you mentioned the issue of even gas. When you say energy transition, it's not the same as spontaneous transition. In other words, you turn off the light and you turn it back again and the world is different. No, that's ideological. Just energy transition means you got to realize where I am. And it's going to take time in terms of technology, in terms of finance, to be able to go from where I am to where I need to be. My point is this: Africa needs time. The second point is this: if you look at what happened with the challenges in Europe because of Russian war in Ukraine, today, European countries have gone back to, quite a number of them have gone back even to coal. They are using gas. And why is that? What is good for the goose is not good for the gander. We believe at the African Development Bank that Africa should use its natural gas for 3 reasons. First, to use it for gas to power, because you have on the continent 600 million people without electricity. Second is to use it for gas, for liquefied petroleum gas, for cooking. Look, I always tell people I'm not wearing glasses because I study a lot, which is true. I started wearing it because as a kid, I grew up blowing, you know, I don't know if you know what I'm talking about. You cook by blowing into charcoal, get all the specks into your eyes. What others consider luxury, it's not a luxury for us. Africa loses today 300,000 women every year. And you know what they are trying to do? Just trying to cook a meal for their family. they lose another 300,000 children, which they keep on their backs. Add that together, that's 600,000 people. And why are they dying? Just trying to cook. So just energy transition must be fair and just at the same time. Women in Africa don't deserve to die just because they don't have access to clean cooking energy. So that's the second thing. If you have liquefied petroleum gas, they will be able to cook and stay alive like everybody else in the world. Third, I spoke about the issue of fertilizers. You need natural gas to be able to produce the fertilizers that you need to be able to raise productivity and feed yourself. So there must be pragmatism, realism, while understanding, and I want to make that point, we all have a collective responsibility to reduce emissions. But the developed countries have greater responsibility than Africa. And I'll tell you one more thing about gas. Today, if Africa uses, what, or 3 times, if it uses 3 times its current gas, do you know how much it will have contributed to greenhouse, to emissions? 0.67%. 0.67%. So, what are we talking about? When you go on a cruise ship of energy transition is as follows. Energy transition between rich countries and poor countries is as follows. You go on a cruise ship, you go from one room to the other, right? You play tennis on the cruise ship. You can shift, but the ship is stable. Okay? If you go on a little canoe where you row on one side like that, if you shift from one side to the other, you are going to go down. And so all I'm saying is this: it's going to take time, it's going to take technology. It requires that we realize that we are not pushing African countries to do what is not realistic, even though I fully support energy transition. I'm just asking for a realism, not ideology, practical, and financing, because there's no way to do it if you don't have the financing to actually do that transition. South Africa, you were asking about a question a while ago. We are mobilized and we are working with G7, and I want to applaud G7 for what it's doing for South Africa in terms of just energy transition. I don't know if there's Adama, you are here from Senegal, no? Is this still here? We are supporting Senegal. We're supporting Nigeria to move. We say as a bank, we will not fund coal. Coal is out for us. But gas is not. Because gas is fundamental to Africa's growth. And as battery storage system, my vice president for energy just talked to you about that, matures over time, and you can store energy and avoid variability of energy supply, then of course that transition will go even faster. But we're not there yet. And we should not compromise Africa's economic growth and development because of ideology instead of pragmatism. So we are the bank, that's our position as a bank. And even just to give you the assurance that we are big on this issue of renewable energy, today, 87% 87% of all of our financing on energy generation goes to renewable energy. 87%. But I was last in Cabo Verde. We supported a big energy project there. It's called the Cabo Elica. Cabo Elica, anybody from Cabo Elica? It's going to supply about 25% or 28% of their renewable energy. I went there. They took me into the control room. What did I see? Variability of energy. They told me energy goes down when the wind is not there. So I'm just going to close on this point. You cannot fix energy in South Africa, Nigeria, anywhere else if you don't have stable grids. And for stable grids, you need an energy mix. And that is very fundamental. It's not ideologies that wrong give you power. It's pragmatism. You need a stable grid to be able to do that. That you have to have a mix of energy. In terms of investment in Africa or outside Africa, let me have my Vice President also have a time to talk. It's all about investments, private sector. Are we going to do it from Africa or we're going to do it outside Africa? Yeah.
So private sector development is really a means to achieving commercial outcomes, but also development outcomes. So we will work with partners from outside, but we also believe in working with partners from inside. And when it comes to African private sector, a greater proportion, especially those that generate jobs, are SMEs. So we also really target our work to developing SMEs, both the environment for SMEs, but also working with banks to lend to SMEs, working with private equity funds to provide equity capital to support SMEs. So yes, I mean, you have heard of the AIF, the Africa Investment Forum. I mean, this for us is also a way of attracting global capital, regional capital, towards transformational projects, primarily in the infrastructure space, but broadening to healthcare, broadening to agriculture. And so, I guess the point I want to leave you with is, for us, we support private sector that are strategically interested and committed to developing sustainable projects in Africa.
Thank you, Vice President. Africa needs all the capital from everywhere. From outside of Africa, from within Africa. And so all we have to do is make sure that investments can land in Africa like a plane, an aircraft, lands on a very smooth landing strip. That's the point that he was saying about risk. Prepare the right projects, bankable projects, de-risk projects, be transparent in how things are structured, have stable, predictable business investment regulatory environment that will allow private sector to be there. These are the things that brings private capital to stay. Capital is like water. It always goes to where there is least resistance. That's just the way in which it works. On the Panda bond, I think you want to talk about the Panda bond? Let me ask Vice President to.
Yes, the Panda bond, I think the question was what were the pros and cons and whether this is something that can be replicated for other African countries. Let me really reiterate what we did in this transaction. We helped Egypt, a country which had developed a very international standard ESG framework to be able to finance projects that are going to help to adapt to climate change, projects that are going to preserve biodiversity. So it is a framework that is extremely demanding, that is vetted by international organizations to make sure that the projects that will use the proceeds are projects that qualify under this definition. So the framework is important. Then we go to the Panda bond market. The Panda market is a market that you access with a AAA rating. At the moment on the continent,
we do not have any country that is AAA rated. But you have the African Development Bank, and this is why the partial credit guarantee that we have provided was really the trigger, and this is what made the transaction possible. But in this transaction, we were also able to attract other co-guarantors like the Asian Investment and Infrastructure Bank, which shows that we are able to crowd in other partners to do more for Egypt. And the third point is that these resources are raised in the Chinese capital market, and as you know, most of our countries have relations with China. So we are basically creating a template to be able to be replicated by several countries on the continent. And we help Egypt reduce the cost of funding, and we also help Egypt diversify the sources of investors, because we are tapping investors which otherwise would not have invested in bonds. So it is something that we will replicate, and we hope that more countries will take advantage of that.
Thank you. Just to complement Marilo, for us, the traditional bond market has been the Euro bond market, but one of the lessons from the recent volatility is it's good to diversify to other bond markets. So there's the Samurai market, there's the Panda market, you know, there's even the Indian rupee market, there are other markets as well, so it's good to diversify. But as the President said earlier, you also have to pay attention to the terms, the tenors, and the pricing. So there has to be an objective way of assessing this diversification. So I just wanted to add that very quickly.
I hope that addresses your question. And Lucy, okay, from Nigeria, about flooding and all of that. I'll just say three things. It's not even just flooding alone in Nigeria. You have drought. The African Development Bank, we provided, I think, what, $250-something million for the, yeah, about $253 million for inclusive basic services in northern part of Nigeria and the northeast of Nigeria that's very much affected by drought, the drying out of the Lake Chad Basin, and the insecurity that comes with that. The second thing is, still sticking to the issue of drought, as I've said, for Nigeria, for Chad, for Niger, and for Cameroon, I strongly believe that we should revamp or revitalize the Lake Chad Basin, because it will make a whole lot of difference. It's not the cost of doing it that's the issue. It's the cost of not doing it, which has now led to a massive amount of insecurity all across Africa. And so I think there needs to be a global partnership on that. We as a bank, we support the Lake Chad Basin Authority in building resilience in that particular basin. But I think globally we need to do more. Myself, President Macron, President Buhari, we have talked about this particular issue. I think we have to be bold enough to take the actions necessary to recharge the Lake Chad Basin. Otherwise, the insecurity you're talking about will continue to be there. It's like flies. If you have blood on the street because somebody killed a chicken or something, the flies are always going to be there. If you want, you can take a fly swat and keep doing this. The flies will constantly come back until you clean up that blood that's on the street. So I think that we owe it to Africa to have a bold measure approach to revitalize that Lake Chad Basin. It will change everything for us in those particular areas. Now back to the issue of the flood that you mentioned. Vice President Dunford mentioned to you the Africa Disaster Risk Insurance Program, which we use to support, he explained to you, countries that face adverse or catastrophic extreme weather events like droughts or floods, I will encourage Nigeria to participate in the Africa Disaster Africa Disaster Risk Insurance Facility, because that way you can protect yourself. I mean, take the case of flood. You mentioned, I don't know if there's anybody here from Madagascar. In Madagascar, when they had a flood in Madagascar, we supported them with about $2-point-something million payout, which allowed almost 643,000 farmers to have access to money to compensate themselves from the flood. So Nigeria needs to insure itself, is what I'm saying, against these extreme weather patterns. And lastly, is the agrometeorological stations. When I was a graduate student at Purdue University in the United States in the 1980s, the total number of agrometeorological stations we had on the campus was more than Africa had. So how do you price things properly if you don't have the data, the weather data, to be able to do all the actuarial analysis you need? And we have within the bank a program on this, the Climate Development Fund, right? Maybe you should say something about that.
So the CLIMDE Fund, what it does is that we try to launch equipment that is able to predict weather, so that we are able to help in countries forecast what is going on in the weather patterns, so that they can be able to prepare predictively, assist their countries to avoid difficult situations when they occur. So what we've done is that we've invested, what Mr. President explained, we had very few these weather meteorological stations. So what we have done as a bank, we have invested in a number of these stations so that we increase the number of weather stations that are able to capture the data that is required to inform decision making on the continent. I think the last one was in East Africa. So basically we are increasing the weather coverage based on these weather stations, Mr. President.
The last thing I want to say about climate change is in agriculture is the importance of technological innovations. What the bank is leading on that. At the African Development Bank, we have a program, and the director is over there. You can stand, Martin Fregene, Dr. Fregene is a director of agriculture for the bank, and is the one leading our work on this area. We have supported African countries to have access to heat-tolerant wheat varieties that can resist heat. If you know, wheat is a temperate crop. But we've supported the development of these heat-tolerant wheat varieties. They allow you to get yields in spite of hot environments and so on. And what has happened because of that? We provided Ethiopia with over, I think it's 65,000 metric tons of seed of these heat-tolerant wheat varieties. To break that down for you, I flew here from Dubai on an A380 aircraft, Airbus 380 aircraft. If you look at that aircraft, it's the largest aircraft you have. The passengers, the fuel, and the cargo is 94.3 or so tons, metric tons. So when I say 65,000 metric tons of seed, I mean roughly that will be about 6 665 A3 aircraft buses, Airbuses, filled with seed. So think about what that is. Ethiopia started 5,000 hectares in 2018. This year, they did 1.4 million hectares. Ethiopia in 3 years became self-sufficient in wheat, became an exporter of wheat. Even in Sudan, which we are having, unfortunately, the challenges today. I worked there, the vice president went there. What did you see there?
So Sudan is also dramatically expanding its planting of heat-tolerant wheat, and is, like Ethiopia, on the path to becoming a net exporter a week in several years. Of course, the conflict has really set things back. But again, it's shown that this technology that allows farmers to plant wheat in areas that were before considered to be too hot and too unpredictable to plant wheat are now really thriving and enabling vast areas of production.
So the point I'm making is that we realize Africa is getting drier and hotter, but we are supporting innovations that will allow Africa to continue to produce and to produce more, even in hotter environments. That's the point I'm making with that. And this is very, very important. And we are in Egypt. And I met with President El-Sisi when I was here in April. And we are already going to be starting a program. I don't know if the country manager is here for Egypt or not, but we are going to be starting a program here to support Egypt to have access to heat-tolerant wheat varieties. Egypt is the largest importer of wheat in Africa. In fact, one of the largest in the world. But they can produce that wheat with heat-tolerant wheat varieties. So those are the comments that I have on this issue.
The last round.
That was the last one?
Yes.
Well, let me thank you very, very much for being here. Thank you for the robust discussion and engagement. Let me thank my vice presidents for being here, for all the great work that they do. Thank you for the private sector that's here. And thank you for all the journalists that are here. I'm sorry that we don't have the translation. Normally we have the translation. But apologies for that translation didn't work for you. So with that, enjoy the rest of the annual meetings, and bon appetit. Thank you very much.
Thank you, Mr. President. Let's give another round of applause to Mr. President and the Vice Presidents. Because he's rushing out, I want to invite you to lunch in the Summit Restaurant. Please, let's head there. And then at 3:30, please join Vice President Beth Danford and Director Martin Fregene in the Feiruz room at 3:30 to know more about food security.